we talked about depreciation and how that can eat up income, whether it's from a passive sense where it eats up the income from the asset or any other passive assets, or it could be if you're active, it could eat up income from your W-2, which is how I was able to go from like a 22-ish% down to like 5. How does one qualify for, like, if you get a full-time job, is it impossible to qualify as an active real estate professional?
No, a lot of people think it is. And the truth is, it's when you really carve it out, you have to look at what's reasonable and could you work. Basically, it comes down to about 15 hours a week. Could you put in 15 hours a week into real estate? Documented 15 hours activity wise toward real estate. And most people, the answer is yes, especially if you're doing an Airbnb. I mean, if you ever try to run an Airbnb, that's a lot of time and
that is my wife does it. Yeah, it's ongoing. That's not a passive.
that is serious active. See, the game changed in the tax code, and people didn't realize it when Airbnb came out. Or even renting your own pad or renting whatever, you're actively involved in it. If there's short-term rentals, which blew up, those will increase the active activity fairly quickly. Long-term game is still long-term. It's still a good game. And then being a GP in a syndication or participant in a syndication, meaning that, I invested, but I'm getting involved in not making decisions, but I'm getting involved more so than just waiting for the distribution check.
So you're on Zoom calls with reporting and management.
Exactly.
How about travel? So say you've got an Airbnb in Orlando and you go out there a few times a year
So all of this plays into consideration. And again, the structure and how you have it in the hours that you're applicable, being applicable to that direct real estate will count. And again, if you're traveling, some of some of that cost, or it could be a combination of all of it, or some of it will be still part of your real estate expenses. Some of it is direct costs and some of it is indirect. So when I call it direct and indirect, meaning that the direct costs are what we normally look at as the repairs, the insurance, the taxes. Those are what we call the direct cost to the property. The indirect is the management of the property. And those are all activity driven. So you write that, you keep a great calendar, because IRS is going to expect you to have proper detailed documentation to claim real estate profession.
Okay.
So you get to take a lot of deductions at that level.
Yeah. So as long as you have the documentation of the deductions and you meet the requirements, because like you said, there are a couple of requirements, time and activity wise, for a real estate professional. It's something that, unless you're just completely passive, if you're doing active work, or if you're a high net worth and like high income individual, doctor, lawyer, attorney, CPA, executive, it's worth looking into how you potentially could get that IRS designation, real estate professional, to offset your $250,000, $500,000 annual salary. Because that right there is game changing. You talk about holes in your bucket. Like when the government's taking 50%, that's a big hole.